Dividends, dividends, dividends. Man, guys, these monthly dividend payment videos that I do every month, they just get more and more fun to make. And that's because the dividends just keep getting bigger and bigger every month. So today we're going to be going over all of the dividends I received in the month of May 2020. I always go 1 month in the rears. That's because June dividends are still rolling in. And let me tell you that the March, June, September, December tranches is by far my biggest money maker months. And I actually cracked over $100 in dividends for the first time in my young investing career. So I'm really excited to show you guys that next month. Be sure that you're subscribed to the channel because you don't want to miss it. But these secondary months are starting to become no joke either, as you will see later in this video. I also bought 17 shares of this monthly dividend paying ETF and also bought into this popular growth stock. So let's get into it. As you guys can see today, the market is down, but hey, that's not the focus of this video because the dividends, they're still going to be rolling in regardless of the day-to-day fluctuations of the stock market. So the ETF that I actually bought was called QYLD, and that stands for the Global X NASDAQ 100 Covered Call ETF. And if we go to the About section here, we can see a little bit more of a description for it. But basically, they are doing covered calls or buy right strategies on stocks in the NASDAQ and selling or writing those options. Now, stock options aren't exactly the easiest concept to explain, so don't feel discouraged if you don't understand it. And that I only recently was actually able to get that light bulb going off in my head to learn more about it and to somewhat understand it. Options can certainly be beneficial for anyone on both sides, right? So it's not like trading foreign currencies where really only one person wins. Investing in this fund can easily save time and can produce better returns in times of volatility, such as what we're experiencing right now. Usually when you see a stock has around a 12% dividend yield, I might be quick to call it a dividend yield trap. But here we can see since its inception in 2013, I'm not sure why Robinhood is showing just since 2018, but the stock price has remained relatively strong. It's not one that fluctuates too much here. A 12% return, I don't think I have to tell you, that's really amazing. And even more importantly, they have made monthly dividend payments for the last 7 years. A 12% return, that's considerably better than the S&P 500, which historically returns on average around 7 to 9%. There is a little bit of an expense ratio of 60 basis points, which is pretty high, but this is sort of the price that you have to pay for Global X professionals to be setting up options, which isn't exactly as a passive of an investment as just, say, buying stocks inside the S&P 500. Plus, it's holding a majority of its assets in companies like Apple, Microsoft, Amazon, Facebook, Google, Nvidia, Netflix, Adobe. All of these are great companies that I wouldn't mind owning anyway. It's not like they're investing their money into junk bonds or sketchy penny stocks. With options, you do need to be able to own 100 shares of a stock. So doing it against Apple, that would require capital of around almost $40,000 nowadays. Amazon alone would be over $250,000. And some of us don't exactly just have $250,000 just sitting on the shelf. So that's why pooling resources together would make more sense with a stock like this. We're going to see their monthly dividend payments while we wait. And it's comparable to a stock like SPHD in terms of the monthly dividends, but the share price is even cheaper and they actually pay even a little bit more every month. I plan on getting this close to 100 shares here relatively quick, but I'd love to hear what you guys have to say about this ETF in the comments below. Also, while you're at it, be sure to hit that like button and subscribe to the channel. I also bought a little bit more of this next stock, which is Amazon. I'm not going to talk too much about it because I've made so many videos just very recently about how great of a stock Amazon is. It may not pay a dividend, but having an online marketplace available during times like this is really key. Not to mention Amazon Prime memberships, plus all that they do with Amazon Web Services and all their other subsidiaries. I have no doubt that Amazon will eventually become a $2 trillion company in a few years, and I'm going to be growing rich with Jeff Bezos of all people, at a much smaller scale, of course. And then the next stock that I actually bought for the first time, I think you guys will be a little bit proud of me, is that it is Tesla. And Tesla, this is going to be a long-term play here. So I didn't buy it for what Tesla's share price is right now. I think we all know how cool these electric cars are, and the more and more affordable that they can be, the more they can make that price tag be slashed in half, or just more scalable and getting those costs down. That's going to be able to get Tesla to a whole new different market of people that can afford them, and that's when sales are really going to start to pick off. But Model 3 and Model Y sales have already increased by nearly 40% year over year. Tesla is also increasing production capability at its now profitable company after so many years of losing money. So I'm down a little bit here on Tesla, but I'm going to continue to dollar cost average in. I also think everything that it's doing with its Solar City and its batteries, it's only going to create more and more revenue streams for this company down the road. Tesla certainly is not on any discount. You're going to be having to pay a premium for a growth stock like this, but with its autonomous driving, which Tesla is just so far ahead of the game with, they're going to be revolutionizing our world. And I don't think I would mind overpaying right now for something that's probably going to give me huge gains in the future. All right, now let's get into the May dividends. All right, guys, so starting off here, we have General Mills at 4 shares for 49 cents a share for a total of $1.96 in dividends. I just made a video on General Mills literally last week, so be sure to check that video out if you want more in-depth analysis on General Mills. I'm actually up pretty big on this position, bought in at some great price points, and they are rewarding me pretty well. Unfortunately, General Mills doesn't raise its dividend every year, so that's probably one of the few setbacks of this stock. Then when we keep going up here, we have Verizon paying us 61.5 cents a share. I own 6 shares of them for a total of $3.69. Verizon, another very safe and stable stock, very large company in terms of market cap, well over $200 billion. And then we have another giant company in AT&T, also paying out 52 cents a share here, and I own nine shares for a total of $4.68. Basically everything I said about Verizon, you can say the same thing about AT&T. Both very safe stocks, not much volatility, but their upside is pretty limited. Basically, you're just owning them for their dividend yield at this point. And then when we keep going here, we also see that MasterCard paid out a 40-cent dividend for each of the shares, and I own 5 of them. So I got $2 in dividends, but MasterCard has given me some great capital returns, and they will continue to do that. And I'm sure over time they will be a bit more aggressive maybe in raising that dividend. So I'm going to start to get a great yield on cost and see those dividends just get bigger over time. Then we also had Apple, which I did the dividend reinvestment program with, or the DRIP with. So they paid out 82 cents a share, which was an increase from last time. And that was, I owned 7 shares of Apple, and then that actually reinvested to like 0.2 of a share now. So I guess every little bit counts, right? I got a nice buy-in at $300. Apple right now is like at $360, $370. So it's already, made me some money. And Apple is my best performing stock of all time so far in my young investing career. Then we have NRZ here. So this is a stock that used to give out 50 cents per share. Now it only pays out a nickel, but I do hope that one day it will return to its former glory. So I owned 12 shares. I used to get $6 per every dividend cycle that NRZ would have, but obviously with their dividend cut, they are in a more risky mortgage-related industry, so I understand why they had to do it. And I am starting to see that share price continue to go up and up, so that gives me a great feeling that maybe NRZ might increase its dividend, but with the whole C19 situation, I understand if they need to have it stagnant at just a nickel. So moving on here, we have Procter & Gamble. This is one that I personally haven't actually bought any more shares of since I first bought it in spring of 2018. So I only own 3 shares. And of course, they're a dividend king, so they do increase their dividend every year. Right now, they're at 79 cents a share. So for the 3 shares I own, that's only $2.37. But now that it'll start to drip, it will slowly increase that number, which is pretty cool to see. Okay, then we continue to get to other dividends paid in the month of May here. We have AbbVie, a biopharmaceutical company. They pay out very nice dividend, $1.18, and I owned 6 shares, so that's a total of $7.08. And then, of course, this one reinvested, and it was a bit more considerable, right? 0.07 worth of a share of AbbVie here. So just continue to not only dollar cost average into these companies, but to start to see them continue to buy themselves, that's also a great feeling as well. And I know that's only going to be increasing the compounding and make those dividends just continue to grow bigger and faster over time. Then we have the monthly paying dividend company here in real estate. That is Realty Income. And make sure you guys aren't saying reality or realty income like some people do. So I own 7 shares of this stock, and right now it is paying out 23.3 cents a share, and that's a total of $1.63 that it repurchased of more O stock. So that's really nice to see that as well. And then when we continue to go up here, we see this company Starbucks, which recently announced that it was closing down some stores and doing more of a mobile pickup sort of store in the future, which should be good. I mean, people come to Starbucks to grab coffee at the end of the day, not necessarily always just to lounge. So 8 shares of Starbucks I owned at the time, and they pay out 41 cents a share. So that's a total of $3.28. This is a new one here. For the first time, I got paid a dividend by DHT. This is an oil tanker stock, so 25 shares, and that netted me 35 cents a share. I wouldn't be getting too used to that. The amount that they pay every month in dividends actually fluctuates quite substantially, so it is nice to get this pretty big dividend here. That'd be close to around a 20% plus yield if it was able to do that for the full year, but I don't think that's going to be happening. So for the time being, I will enjoy this dividend, but as you guys can see, I'm down huge on this position, but I will just continue to hold it for the long term here. And then as we make our way into the last company or ETF that paid me here, that's SPHD, and I own 6 shares for 15.5 cents a share, for a total of 93 cents. So those were the companies that paid me in the month of May, and that's actually passive income, right, guys? I didn't need to lift a finger for any of this other than the upfront research that I did when selecting these stocks. And again, I say this every month. I can still use the bathroom at work and make more money, but eventually one day that's not going to be true anymore.
Fuck the one? I hope so.
So in May of 2020, I made a whole $42.71 compared to just $14.55 in May of 2019. And that actually represents 193% change, which is somehow even bigger than the 70% change that I experienced from May of 2018 when I earned just $8.58. It's super crazy how fast this dividend growth investing journey is going for me. $43 is enough to almost cover the cancellation fee that I have to pay Comcast for canceling my internet because I'm moving. And I mentioned that next month's dividend payments are over $100, right? Yeah, that's also going straight to Comcast to reactivate once I get to my new place. So basically all my dividends are going straight to Comcast. But I wouldn't have it any other way. So guys, we are in the middle of a down day, and I'm going to be buying more dividend stocks. Be sure to let me know in the comments what looks attractive for you at these prices, and let's keep growing these dividends and get rich together, guys.